Yo, 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 what's up, everybody? The reason I'm so hyped because I hope y'all ready to make some money, y'all. Remember, I'm not a financial advisor. This is not financial advice, right? So don't take it as that. I'm not a financial advisor. But all right, I've been collecting some data. I'm so jacked because I want to show you guys this information and I caught it and I think I know what causes, runs, short squeezes, pops in price, right? And I'm gonna break that down for y'all. I got a lot of information. This is probably one of the most important AMC videos that I have ever done. I'm not even messing around. I'm not even pulling your leg, right? So, what's up, players, traders, haters, right? Retail investors, everybody. If you want to listen in on this information, you got to watch this video, all right? Especially if you're holding AMC and GME, and if you're looking and you're impatient and you're wondering why the squeeze hasn't happened, we're actually in the best position for this to happen, right? And I believe I have proof, all right? So, proof of concept, I have the receipts to back it up. Okay. So, yeah, grab a coffee, grab a Coke, grab some snacks, whatever you need, right, to enjoy this video because you're going to be happy at the end. Watch. I'm telling you. All right. So, AMC had a little bit of a green day today. I think we're up like 7-8%, but the volume wasn't there. Yes, everyone's going to be talking about the Fed Powell, Jerome Powell, right? He raised the interest rates again, so 0.75 basis points. And that is important because it plays into our short squeeze. And it might sound bad. Yeah, it's bad for like the economy to borrow money, to do all that stuff, but it's actually bad for the short sellers because their short positions are becoming more and more expensive, which is more likely for them to be squeezed out. All right, guys. So if you haven't already, right, engage with the video, hit that like button, hit that subscribe button. I see all the new subscribers. We're still growing the channel, right? And we're not stopping, okay, until we're gonna see this through, right? AMC, the MOAS, GME, and yes, I believe both of them are gonna squeeze at the same time. All right, guys. So yeah, hit that subscribe button, all right, guys. But let's jump into this information, all right? So get ready for this. Let me switch it up on y'all. Um, let's start off with, let's see if it's this one. I have two to show you. Yeah, so I need to show you this chart. Okay, so yeah, there's a lot of information on here. All right, so let me lay the groundwork for you guys here. Okay, it has to do with the cost of borrow fee. That is what I think is going to squeeze the shorts out. I think that's what caused the run last year, and I'm gonna explain this all right now, right? But I think it's when you start to see that fee go up, go up, go up, and I already analyzed three stocks and it worked, right? Of what I'm talking about. When you start to see that fee go up, this puts more pressure on the shorts, right? Because depending on how many shares short they have, they're paying more and more and losing more. All right, and the fee has gone up for AMC from 1% and it peaked at 25%. Then it came down to like 16 and 9. And today there was basically zero shares. So you couldn't see how many shares there were. Okay, but I'm going to show you these screenshots first. All right, so you understand the perspective and the information. But for scanning for a short squeeze, right, essentially there are these three conditions that must be fulfilled. The number of shares short should be greater than 5 times the average daily volume. The share short should, as a percentage of the float, be greater than 10%. The number of shares should be increasing. Okay, so I'm going to prove to you that, AMC is doing that it's in the squeeze zone, that it's checking off, for the squeeze potential, right? Now, can a share be shorted twice? If you don't believe by now there's fake shares out there, double lended shares, synthetic shares, well, you're gonna have to do more research because here's proof, all right? Can a share be shorted twice? Yes, a share can be lent and shorted more than once. If a short seller borrows shares from one brokerage and sells to another brokerage, the second brokerage could then lend those shares to another short seller. This results in the same shares that could be as shares sold short, right? These results in the same shares counted twice as shares sold short, right? So you got to keep that in mind, all right? Because these hedge funds and the lenders, they're all in bed with each other, right? So you could have the same shares just being lended over and over and over. Okay, next. This has to do with the cost of borrow fee and the shares that are on loan, right? So how can so many shares be returned? This is from yesterday compared to yesterday's volume. In order to be returned, shares must either be purchased, settled, borrowed, or either held or relent without being sold. Shares purchased on Friday will not settle until today, right? So what I was expecting, because they were saying this information, right? It's the T+2. So the shares that were returned on Monday, the 30 million, were returned, right? We wouldn't have seen anything until Thursday, right? Because it takes 2 days for them to show up to settle. But interestingly enough, today in the morning they borrowed them again, right? So now there's actually more shares on loan than there was. There's like they borrowed 35 million, right, when they had returned 30 million. So the total amount of AMC shares on loan right now is in 195 million. That's insane. That's the highest ever, all right? And then here's the proof from yesterday, right? So that everybody was, I started looking into this too, like what, how is this possible with no price movement? So 159 million shares as of yesterday, right? So let's go into this piece right here. The cost to borrow fee, right? I'm gonna of course read it. Let's start here. So June 1st, 2022, right? You had the run, right? The cost to borrow fee that it went up. But just to put into perspective, here's the percentages when the fee is going up, right? When it's rising, depending on how many shares they have borrowed, right? Just to give you an idea. So if they borrowed 100 shares, the fee's only $1, right? Okay, too short. Not bad, right? If they borrowed 1,000 shares at 1%, right? That's $10, okay? And then so on. So if they borrowed 100,000 shares they shorted, that's $1,000, right? And it's an annual fee, but the higher it is, the more they have to pay daily as well, right? So 2%, same concept, 100 shares, that would be $2, okay? Now we have seen the AMC fee rise all the way to 25% this time. Last time it went all the way to 90%, okay? But right now, the peak so far is 25%, right? So 100 shares will cost you $25, 10,000 shares, $2,500, and 100,000 shares would be $25,000, right? Just to short the stock, right? To borrow those shares, okay? And where are we at right now? Okay, so this is happening right now, right? June 15th. I did this yesterday, right, for you guys. So we don't know the peak of the fee yet, all right? But I'm going to take you back. This is what causes the short squeeze, right? In my opinion, look, the timeline, right? So May 7th, the cost to borrow fee was when it started rising last year, right? Last May. So it went from 11.3% all the way to May 12th, and it hit the peak of 90.1% from the screenshots that I had, right? So the price started running from May 12th, literally, right? It hit the peak, comes down the cost of borrow fee. And then May 12th through June 3rd is when we saw, AMC do its thing last year. All right, so the fee right now is going down as far as we can see, but they ran out of shares, right? Zero. So we don't know if that's the peak. I still think the fee can definitely pop a lot higher. We'll see next time some shares are printed or some shares pop up, right? But 30 million shares were gone yesterday, but now they're back, right? So 195 million, just to show you, right? And there is companies like I just saw short, right, that got reported for AMC on Fintel on May 27. They had shorted 42,000 shares, right? So that at the 25%, guys, that was definitely hurting them, right? Because they had already had that position open by then, right? All right, so I need to point that out. Now, we're gonna jump into the internet here. All right, guys, and hope you're enjoying your coffee or whatever. There's still more information to come, all right? Dutch Bros, if you ever want to sponsor me, holla at me, all right? But anyways, let's look at this information here, right? Because we're still talking about cost to borrow and whatnot. So these are just some risk of short selling, right? So short selling stocks is much more costly than traditional trading. First, to borrow money from a brokerage firm, you're required to open a margin account. That typically comes with a minimum margin requirement. If your brokerage account funds dip under the margin requirement, your broker will issue a margin call, right? That's what we've all been looking for. In addition, when you trade stocks on margin, you must also pay interest fees that gradually add up until you return your borrowed shares. Lastly, a stock with high short interest, stock that has a high percentage of shorted shares that haven't been closed out, might have additional hard to borrow fees based on the stock and the price of the availability, right? So finally, we start to see the shares of AMC to run out, right? The past 2 weeks, I mean, they have hit zero multiple times, all right? And we have different, sources for that. But here's some more information on a short squeeze, right? A short squeeze can also happen when a heavily shorted stock starts to rise and the short sellers start buying to close their positions and cut their losses. This is why I still believe, the AMC short squeeze is in play right now, guys. Okay, let me read this for you guys too. The higher the price goes, the more money the shorts lose, right? At some point, the short seller will probably give in buy. We get nervous when we are down around 30%, said the fund manager. Buying begets buying, creating a snowball effect. Short sellers buying shares to cover in their positions push the price higher and higher. forcing more shorts to do the same. It's a domino effect, right? The potential for a short squeeze is one of the reasons that some investors watch rising short interest. When a stock short interest exceeds 20% of the number of shares of the trade, some of the number of shares that trade, some people believe the stock is ripe for a short squeeze, which means a nice pop in price at last. These price jumps are usually short-lived, right? When it's a squeeze, it's fast and it's violent, right? Most of the time. Once the short sellers finish buying the stock, it should return to where it was. This satellite telephone venture, Iridium, right, filed for bankruptcy last August, but the shares of its publicly traded entity unexpectedly jumped a few months later thanks to a short squeeze. That run-up provided some investors with a nice short-term pop, but it didn't bring the company or the stock back to life. Iridium in March announced it was shut down, right? So even though they announced bankruptcy, right, the squeeze still happened, guys. All right, that's crazy, right? Okay, let's go over to right now. Let's go over to the chart, right? I already showed you that information. And again, the AMC fee, right? Last year, let's just pull back here. On May 12th, right? Or the 7th, sorry, May 7th through the 12th. You see that the fee started to pop, right? And literally what happened? The price started closing shorts out, right? You see that pop. And then when it really ramped up all the way till the 12th, right? So it was the 12th. Right here, the 12th. So you get a big green candle, you know, people are like, oh yeah, you know, the fee, whatever. And then the fee skyrockets and AMC takes off, right? Because I believe that's what caused the shorts to shut down, to buy shares, right? Close the positions. So here, right, you have this whole section, right? So where are we at right here? This is where I believe we're at. Had a nice green candle today, which is still riding this overall downtrend, but we closed the candle above it, right? So my plan A is gone. I knew that was the one that I said it was too good to be true if it just, you know, went right through. But now let's see if it starts to follow plan B. All right, and then we still have plan C over here. Okay, so we all know where we're at with the charts, but I think the you know, the fact that the Fed is raising interest rates, that's gonna hurt the short sellers, trust me. All right, guys, I cannot show you the current fee because they ran out of shares. This is the most up to date, but once they run out of shares, they stop reporting on this website. But remember, like I said, the fee, once it skyrockets, that's when right after you usually get a pop, right? And I'm going to show you like it happened with the Redbox too, okay? So we're going to go to Redbox, right? So the date right here, right? The date is March 20th. Or not March, April 20th, sorry, April 20th. And then the fee skyrockets within a few days all the way to 738% on the 13th. So it took almost 2 weeks, right? About 2 weeks for this to go down. Now let's go to the chart. Let's go look at May 20th, right? Literally, May 20th, right? The fee jumps, right? So they're paying more and more, they're losing more. They have to close out, right? The shorts. What happens to Redbox? You get a huge run, guys. Huge run. This is the daily chart, right? Comes back down. They just shorted it more, but then that's when retail got involved and pumped it, right? And got the volume going. So there's another proof, right? The cost to borrow fee, guys, that is what causes the short squeezes, right? That's what pushes them out. I'm telling you. Now let's go look at Gamestop, right? I gotta go to iBorrow desk for Gamestop. So right here. Same thing. I'm going to prove this to you guys. This is proof right here, right? Because the fee is just chilling, right? Chilling. And then right here again. So this is May 16th. Let's see, March, April. Yeah, May 16, 17, 18, 19, right? So on the 20th, May 20th, right? Is when the fee started to go up. And it went all the way up to 70 or 100%, something like that. It started to drop recently, but now it's going back up again. It's at 31.5, that's good to see, right? But we're gonna go to the chart, right? So we said May 20th. We're gonna go to GameStop. May 20th, guys. 2 days down, right? The fee blows up. What happens to the price? And GME right now is in a crazy spot, guys. It bounced, it got rejected here, bounced, double bottom. Now it's trying to break, and right now it closed literally. This is the daily chart, so I'm zooming out. But you have to pay attention. We closed right above it, right? if GME can break this, guys, like above 153 especially, right? But this is the line. It's gonna go on a technical breakout, guys. Like I'm talking about a crazy pop, right? Like I don't know how high, I don't know how many shorts would close, but I'm just telling you, right? That's what's called a technical breakout. And usually you have the 1, 2, 3. This is gonna be the fourth test again, and yeah, it's at the end pretty much. It could start to come down and retest, but the options chain right now is another sign. Okay, if it starts to run both AMC and GameStop by Friday, guys, we still have 2 days of trading. It can definitely go, right? The options would gamma it, right? So there you go. There's proof right there. I'm telling you, AMC, GameStop, Redbox. When the fee goes up, that's what forces them to start closing out, right? Because it becomes so much money that they're also paying on the side, guys, right? So trust me on that. That's proven right there, right? And right now, let's go to AMC, right? So again, there's proof: 195 million shares on loan because they were reborrowed, right? The shares. So we go back 22.94%. It's the most current I could find. The highest cost to borrow max, 33%. Good for us, right? The apes. Here you go. This is the one I was going to show you. This is proof. They haven't been reporting anything in July. I don't know why. Usually they report every day as far as the buys and the sells, but I went to look at the shorts, and this company opened the short on the 27th, right? So on the 27th, well, that's when it was reported, right? So they probably opened it around here. So they're probably pretty even, but they could definitely start losing money fast. But just remember the fee they're paying was 16%, 20%, 10%, 11%, right? It's fluctuating, but if it starts to ramp up, you're going to see a lot of shorts feel the pressure, I'm telling you, right? So there's proof. Here's the options chain, what I want to see tomorrow, I want to see a push above 13 because there's 18,000 open right there. This could cause a gamma. 15, 20,000, open interest right now. And at $20, there's 40,000. If for some reason we can make our way to 20 bucks, 13 to 20 bucks, anything above that, guys, is going to be the danger zone. I'm telling you, like they would freak out the shorts, right? We start to run. We have all this gamma here, all the way to 42 if we, 30, 21,000. And it's also on Friday is quad witching, guys. Like this is a very volatile day, which could help us bring volume in, right? That's what it normally does, right? Because a lot of swaps, a lot of options, a lot of things expire. Oh, look, they found 2,000 shares. That was at zero before when I was checking. So right now, 9.7, all right, 10%. I want to see that fee go up. It needs to explode, all right? That's how you get the shorts. But how do we get that to explode, in my opinion? I think it's just by buying and holding right now, right? If you can, you buy right now and you hold. That's what I'm doing, right? So there's the proof, guys. Here's the fee. Let's see. We always want to check multiple sources. And this website's showing 0, right? And here's the fee rising. And then anytime it dropped because anytime there's 0 shares, it doesn't show the fee. So that's why you see the blue line. But when it comes back, it'll readjust. Now, I want to show you something that's disgusting. That even after a year, guys, let's go to the FTDs. The FTD report was released today. How do you have a million failure to delivers, right? That's why this is red, a million. Every single time the price starts to run, guys, in my opinion, they intentionally, create FTDs because they know that that's what's going to keep the price. If they were to process all the orders, AMC would take off, right? But this is proof. Now these, a million, right? They happen on the 24th. Now let's go back to the 24th. What happened on the 24th? What do you know? We had a green day the next 3 days. And then we got rejected here, right? If all those orders, guys, would have gone through, we could have definitely been testing up here, right? But they don't want that, right? The shorts, they don't want the price to go up. They don't want to get squeezed out, right? So they do all this stuff. And there you go. That's just absolutely disgusting. It makes me sick. All right, so I already talked about GME. I'm just gonna, show you the macro. Definitely a nice day. Very volatile, but got a push. It almost broke the 130. Okay, so I'm looking tomorrow. I want to see that break above 130. Okay, to get a move to the upside. But okay, and then before I wrap it up, here's the last thing. So just to show you the options chain, same thing. There's a bunch at 140. And then let's see at 150, 10,000. And what's crazy to me is that the chain goes all the way to $680, right? 31,000 open interest for GameStop right now for this Friday, right? So there's a lot of potential there, guys. That's like all we need is a little bump, a little run, and things could get sloppy, right? For the shorts, we would see a lot of price movement, right? So yeah, I already proved this to you. Let's go look at the FTDs for GameStop. Oh, this is for Redbox. Whew. See, anytime the price starts to go up, this is when it started running, right? Right around this time, they created all these FTDs, right? And it's not. I mean, I did buy a couple shares of Redbox just to support, right? But I'm not too involved in it, to be honest. But the numbers are there. The numbers are insane, right? But it did prove already. I proved this that on the 20th, that's when the fee exploded. And what happened? The price exploded, and it happened with AMC too. So that's what I'm telling you guys. Like we're right there. The squeeze is definitely in play right now, guys, and I can prove it once more. Okay, this is what I want to see, a share recall. This is what can also force a squeeze, but this is what happens when there's a share recall. The lender asks for a share recall, right? The short sellers are notified, so they do get notification. Short sellers are forced to buy back the stock and cover the short position. The shares are returned to the rightful owner, right? And that's what we're looking for. We want to see a share recall because there's 195 million on loan. So if enough of them are recalled all at once, then that can really cause the push, right? So that's what the mixture was, right? The fee went up, short started closing out, share recall, you start to see the price go. All right, in my opinion, that's how it works. Okay, next, I'm gonna just close it up with this. Remember the three things, the three checks to signal a short squeeze, right? So as of today, 195 million AMC shares on loan, which is like how, if we own 85, 90%, how in the world, right? I don't know. Volume was 27 or was 37 million, which was a little more, but this still means the shorts have no exit, guys, okay? Because there's 118 million shares sold short, right? So these are the conditions. So the shares short 5 times the daily volume. Daily volume is even if it's 30 million, right? 30, 60, 90, 120, 150 million shares on loan. We're checking that off, okay? 5 times greater, right? That's how many shares are short. The short interest greater than 10%. Right now it's at 22.94% short interest. And the number of shares are increasing. So we went from 150 million shares to 195 million shares, guys. So do not panic. We're in the moment right now where this thing could start really ripping, right? And now we have the data to back it up. That's why I'm telling you guys, this is probably, one of the most informational, important AMC videos I have ever done. So I hope you enjoyed it. I'm looking forward to the next, week or so, the next few days. There's going to be a lot of volatility, and I think there could be some major problems for the shorts. All right, guys. So as long as we continue to hold, buy and hold, do our thing, the 8 thing, right? I'm with y'all, and we're going to get through this. All right, we're going to see this till the end, and I'm confident. I have a lot of confidence in this play. All right, guys. So catch you guys later. Peace out.